Welcome to the channel. If you're new here, this is where we cut through the noise and explore the real truth behind modern investing. From crypto to tokenization, from property tech to the promises of blockchain, we uncover what's real, what's hype, and what you should actually know before you put your money in. So if you want clear insights without the marketing fluff, make sure you hit subscribe, tap that notification bell, and stay tuned, because this is the stuff nobody else will tell you. Now let's dig into today's topic. Why selling your real estate token is much harder than buying it. And trust me, this is the side of the story most platforms don't want you to think about. Let's be honest, platforms make buying real estate tokens look like a dream. They tell you things like, fractional ownership, you don't need millions anymore, just a few $100. Blockchain-backed, transparent, safe, unbreakable. Sounds futuristic, right? Passive income? Who doesn't like the sound of monthly rent checks flowing into their wallet? And here's the thing, they're not lying. Buying is usually super easy. Think about why. Platforms are designed to get your money in the door. They've built slick websites, mobile apps, smooth payment gateways, even one-click signups. It feels a lot like Robinhood or Coinbase for real estate. Fast, modern, effortless. You click, you pay, you're a token holder, and at that moment, it feels like you're smarter than the traditional property investor who has to deal with banks, lawyers, and tons of paperwork. But here's the trap. Buying is just step one. The illusion sets in when people assume that selling will be just as quick and painless. Spoiler alert, it isn't. This is where things start to get messy. When you try to sell your token, you run into a wall. Suddenly there's no deep pool of buyers waiting. In fact, sometimes you can only sell on the exact same platform where you bought the token. No open market, no competition, no freedom. Even when you list your token for sale, it might just sit there, gathering digital dust. For weeks, or even months. And if you do get lucky and find a buyer, chances are, they're offering less than what you paid. They'll want a discount because they know you need liquidity. So your so-called liquid real estate investment suddenly feels like a locked box with no key. Let's compare this to real life. Imagine you own a rental apartment. If you need to sell it, you've got options. Hire a real estate agent, list it on Zillow, put it on the MLS, even auction it if you want a quick exit. There are multiple doors you can open. With tokens? Nope. You're stuck inside a walled garden at the mercy of a tiny marketplace that may or may not have anyone interested in your token today. So why exactly is the secondary market so dry and unforgiving? Let's break it down. Limited marketplaces. Most real estate tokens can only be traded on the exact platform where you bought them. That's like buying Apple stock. But imagine you could only sell it back at the same store you bought it from. If nobody else shows up to that store? Too bad. Low liquidity. Unlike stocks or crypto, which have millions of buyers and sellers at any given second, real estate tokens have a tiny market. It's more like trying to sell a rare baseball card. You might find a buyer, but only if someone specific happens to want it. Regulatory speed bumps. Many of these tokens fall under securities laws. That means platforms have to restrict who can buy or freeze trading to stay compliant. These legal guardrails might protect investors in theory, but in practice, they slow everything down and choke liquidity. Valuation gap stocks have a live ticker. You know the exact price at any second. But with property tokens, valuations are often months old, based on appraisals that may already be outdated. That makes buyers nervous. Nobody wants to be the fool who overpays for an illiquid asset. Put all of this together and you see why the selling process is such a headache. Let's make this real. Say you buy a $1,000 token that represents a slice of a Miami apartment building. The platform promises steady rental income and liquidity on the secondary market. Fast forward 6 months, you need cash, maybe for an emergency, maybe for a new opportunity. You log in, ready to sell. Here's what you find. There are only 3 buyers active on the marketplace. 2 of them are offering just $700 for your $1,000 token. The third one? They placed a bid weeks ago and haven't logged in since. Now you've got a choice. Take a 30% loss just to get out. Or keep holding, waiting for who knows how long until another buyer shows up. That's the reality of these platforms. The market depth just isn't there yet. What looked like a simple exit turns into a long, uncertain waiting game. This leads us to the bigger illusion. People are told that real estate tokens behave like stocks or crypto, liquid, tradable, and easy to cash out whenever you want. But in reality, they behave more like private equity or startup shares. That means you might have to hold for years before you can exit. You might only be able to sell at a steep discount. And if the platform itself fails or shuts down, Good luck finding a buyer anywhere else. So let's call it what it is. The entry is smooth, the exit is painful. That's the secondary market illusion. Now, I'm not saying real estate tokens are bad. They're exciting, they're innovative, and they might genuinely transform the way people invest in property in the future. But you need to go in with your eyes open. Here's what you can do to protect yourself. Treat them as long-term investments. Don't expect quick exits. Ask about the secondary market. Who's allowed to buy your token? How active is the market really? Understand the fees. Some platforms charge heavy trading or withdrawal fees that eat into your returns. Don't overcommit. Only invest money you can afford to leave untouched for years. Think of these tokens like planting a tree. You might enjoy the shade later, but you don't chop it down a week after planting. So the next time someone tells you you can sell your real estate token anytime, remember, it's not like pressing the sell button on Apple stock or cashing out your crypto in seconds. It's more like trying to sell a painting at a small art fair. Sure, there might be someone who wants it. But will they show up today? Will they pay your asking price? That's the risk. And that's the secondary market illusion, the part of tokenized real estate that looks easy on the surface but is much tougher when you actually try to cash out. Thanks for watching. If this opened your eyes to something you hadn't considered before, make sure to like this video and subscribe for more honest takes on modern investing. And let me know in the comments, have you had experience with real estate tokens? I'd love to hear your story.